Laurence Balanco is with us of CLSA. He's, of course, one of the most watched technical analysts in the world. Laurence, good morning. Great to have you with us here. Thanks for joining us. I mean, just absolutely mind-bending moves, right, with oil and actually oil. So let's just start there because that seems to be what is driving everything, Laurence. Is there any way to tell which way we are headed and what's your forecast here?
Yes, I mean, what we did, we looked back at Gulf War I, Gulf War II. We also looked at the Russia invasion of the Ukraine. And what our observations were is that obviously while you get the initial spike in oil, what we've seen in the other episodes is that oil reverses fairly sharply and ultimately drops below the level that the conflict started at. So, in this case, we started at the $72. We had the massive spike up just short of $120 yesterday. And that intraday reversal is the first signs of buying exhaustion and the potential for now a reversal in the Brent price with the first level of support now sitting at the $81 to $82 area and then back to the $72. I think even if we get some stability at this $82 area, our base case has been that you want it to be fading this move higher in Brent and looking for it to move back to the $72 area.
By when, Laurence? Laurence, by when? 72 by when, in your opinion? What's the timeline here? I mean, if there is one.
You've seen the speed at which these markets move at. It can be, in the short term, as long as you continue to get a de-escalation on the Middle Eastern side. It's very difficult to give you a time horizon around that. But like I say, out of all the observations that we've made with major conflicts in the Middle East is that oil has reverse back below the starting point. So, ultimately we think this goes back to 72 and last night's price action looks quite meaningful, and that's one of the bigger intraday reversals that we've seen for Brent. If you go back to the 7th of March 2022, it was a 11% intraday reversal. If you go to Midnight Hammer, which was the operation run last year in June, it was a 12% reversal. And like I say, in both cases, oil reversed back below where the conflict started.
Yeah. Just one last question on this, Laurence. Have you heard sort of any chatter, indication of, governments being involved with sort of, that's last night, with in oil markets, traded oil? Any indication, any chatter of that? There is some on social media that said, I'm not sure.
Yeah, I mean, so I've just seen the headlines coming through on the news wires of the G7 meeting for the special reserves release.
No, Laurence, I don't mean actual oil being released, but basically in financial markets to cool the price of oil, to kind of sort of to sidestep speculators, so to speak. I mean, intervention in markets.
I haven't seen any headlines sort of confirming that or seen any evidence within in-market action from that, if I look at overnight rates or anything like that. So I haven't seen any sort of typical tools that we've seen historically being used to suppress markets. And what I would highlight to you is that we haven't really seen any real signs of capitulation within the equity markets. If I give you an example, in the US markets, what we've seen since the outbreak of the conflict in the Middle East is more degrossing of positions. You've seen a strong rebound in the software names and a sell-off in the semiconductor names. And essentially, it's been an unwind of the momentum longs in semiconductors and covering of the shorts in the software side. So we haven't seen that one-sided volume sell-off to the downside that historically has given us capitulation selling. So if anything, the markets have been quite resilient in line with the headlines that you've seen.
So it's more of a position unwind rather than full panic capitulation that we're seeing in global equities. Laurence, hi, morning. Rima here. What about the Indian markets? We've been consolidating now for nearly 1.5 years. Yesterday, we almost got to a 10% correction from our recent peak levels. What are the markers on the Indian markets and the near-term, medium-term call?
Yeah, I mean, it's interesting that yesterday we managed to close back above the highs that we saw in March and April. And that was quite important because that was the basing pattern that we saw in the first quarter of 2025. And that level sits around the 23,800 to 24,000 area. So yesterday's intraday reversal of the session's lows to close above this level and today's follow through to the upside essentially keeps the Nifty consolidating in this range that runs from 23,800 all the way up to the 26,300. And that's been the range, as you rightly say, of the last 12 months. The Nifty has been consolidating. And so it's important that we respected that support area. And it just leaves the market in a consolidation pattern rather than giving us any evidence of an imminent breakout. But holding that level, I think, was quite important because closing below 23,800, there's no major support until you get down to the 22,000 area. So that's the critical line in the sand here that we continue to respect and hold above 23,800 at the end of the day.
So when we get to, say, Brent at $72 per barrel, do you sense a breakout in this consolidation range for the Indian markets?
So ultimately, yes. The important thing is that in this phase of uncertainty, we continue to hold that 23,800. And on a longer term basis, breaking above that 26,300, we have a number of targets, starting at 28,800, but ultimately stretching up to the 41,000, which has been our end of the decade target for the Nifty. But if we just focus on the shorter term side, 23,800 is important. We could spend another 3 months at least consolidating in this current trading range. But the constructive point is that we've respected support so far.
Right. So 23,800 is an important support. We bounced from there. The next important supports that you speak about is between 24,300 and 24,500. We need to cross past that for us to, go around that 26,300 to 26,350 sort of mark that you've been speaking about. Right now, we're about a 400-point distance from the 23,400, 500 mark. And I'm talking about just here and now, obviously not medium to long term, where the markets are poised to do well. Do you think because of the reverse polarity in nature, as of now, in the very near term, this 24,400 to 24,500 mark could prove to be a bit of a resistance?
Yeah, looking at the bounce that we're getting, I think we can actually test that 25,500 area on this initial rebound. And then obviously I think the shorter term swings will be dictated is to the headlines around the Middle East and those oil price moves, right? But in the near term, we're getting a relief rally that should see us move back towards that 25,500 mark.
And chartically, what is your call on the Nifty Bank if you track that one? And alongside that, outside of equities, what about gold?
Yeah, so disappointing that the Nifty Bank Index yesterday did close below its 200-day moving average. So this is the first time that we've been below that since March of last year. There is some support that kicks in around the 53,200 to 53,300 area. But I think that damage below the 200-day now at least suggests a period of repair and consolidation there. So the 200-day now acts as resistance or immediate resistance at the 57,646 mark. But that was an important sort of deterioration in the NSE Bank's price action yesterday. So a question on gold. Our base case is at the January peak. We need time to digest those explosive gains that we saw into that January high. We think that you've got a floor in place around the 4,600 to 4,800 area. And in prior bull markets that we've seen in gold, for example, the 99 to 2008 moves, there were 3 phases that you corrected for a 6-month period before you had the platform for the resumption of gold's longer-term uptrend. And we think we're likely due a number of weeks consolidating here. But any weakness within this current consolidation pattern, we think you can accumulate gold, but you shouldn't expect an imminent break to new highs. We think that is more than likely a September, October event for a breakout to new highs. So currently in a holding pattern and consolidating.
We're seeing big moves in the Asian markets as well. Kospi in particular, circuit breakers on the way down, then leading the regional rebound. What's the price action telling you in the regional markets? Which is the strongest looking chart right now? And how would India fare over the medium term versus the other emerging markets?
Yeah, in fact, you've seen India outperform the emerging market index by 5% since the 25th of February. And the reason why it's outperformed is that the North Asian markets in Korea and Taiwan have just fallen so much more than the Indian market, despite the moves in oil that has had a negative impact in India. So that has seen relative outperformance. But if we come back to the North Asian markets, both for Korea and Taiwan, the 18% pullbacks that we've seen in Korea, the over 10% pullback in Taiwan has really just brought those markets back to their 50-day moving averages. What we see here is, like we saw in October and November of last year, is a correction back to the 50-day consolidation pattern, and that should set a platform for another leg higher at the end of the day, assuming that we don't get a continual escalation in the Middle East. I think obviously that's an important caveat to that message, and the 50-day moving average being the key support area. So in relative terms, both Korea and Taiwan holding their 50-day and resuming their uptrends, we're likely to see India still be a relative underperformer in that scenario.
Right. You expect India to be a relative underperformer. Just a final question from my end, Laurence. We did speak about the Nifty Bank. Let's talk about the other two components or major components of the index. The IT pack, which has been underperforming, though now resilient because of the weakening rupee and perhaps no other place for capital to hide. And the other part is Reliance. So if you have an individual stock call on Reliance and the IT index in India.
I mean, Reliance has basically been trading in a range between 1,300 and 1,600. We bounced off 1,300, as the oil price ran up, and we pulled back a bit. But 1,300 is key support on that Reliance charts. But we don't really see any imminent breakout outside of that trading range and holding pattern that you've seen it. The IT sector, while you've had some short-term support here, if you take a step back and you look at the longer-term profile, the weakness that we've seen basically from the February highs has seen the IT index break below the lows registered in 2024 and 2025, which comes through at about the 31,700 area. So as long as the IT index remains below that 31,700 area, from a longer term side, a major top is in place for the NSE IT index that leaves it vulnerable to a continuation of that breakdown that points down towards 26,200. So despite the short-term stability that you're seeing here, we have seen a significant breakdown in that index below the 2024 and 2025 lows.
Yeah. Sorry, got that. So there is IT and 31,700 there, and Reliance supported 1,300, but no imminent breakout. We've got a line going, India to outperform Asian emerging markets by 5%.
No, I think he said from some part in February, India has outperformed emerging markets.
I think so it's basically been from the 25th of February to date.
Yeah.
You've
so
seen
you're talking
India
about,
outperform,
yeah,
and
you're
that's
talking
because it's fallen less.
Yeah, you're talking about historical. I mean, what's already happened, because what I heard you say is that India will underperform the Asian emerging markets. But
yes, so going forward, the fact that Korea and Taiwan are holding their 50-day, that sets them up for a resumption of those long-term uptrends, assuming we don't get continual escalation in the Middle East. And under that scenario, you've got another leg down of relative underperformance.
Yeah, we will just correct that line. Laurence, just last question. Is there an accumulation list with regards to stocks in India? I mean, any names, 3-4 names which you think are...
From compliance side, we're pretty limited to sort of speak about individual names. Reliance, I've given you the support and resistance areas, but we'll have to keep it to sector levels. I mean, I would highlight the broader PSU space as a space that's continued to improve as we've started this year. And we are seeing relative and absolute performance despite some of the shorter term volatility. So I would single out that as a sector that has definitely improved through the first 3 months of this year.
Yeah. So this is overall PSUs, right? Not just banks, but everything.
Yeah, overall PSUs, that's correct.
Okay, got that. Thanks very much, Laurence. It's a pleasure having you with us here, and really appreciate your time.